Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. Today's date is Friday, November 25th. It's the last day of the week. It's a day after Thanksgiving, so those traders in the U.S. either have a hangover from too much drinking or a food hangover or both from too much eating. So get well out there. The good news is it is somewhat holiday trading here in the U.S., where the U.S. stock market and the bond market will close early. The stock market will close at 1 p.m. ET, and the bond market will just close at 2 p.m. ET. That's good news because the U.S. versus England will play in the World Cup. That game will start at 2 p.m. Eastern Time, 7 p.m. in London. So you traders in London get home or to the pub and have a pint or two as you enjoy that game. So let's get into the markets. We'll start with the Euro versus US dollar. We are seeing a move to the upside here in the dollar in early US North American trading, afternoon trading in London, being helped by move back higher in US Treasury yields. So I'm looking at the 5-year up about 4.3 basis points. The 10-year is up around 3.7 basis points. European yields are also sharply higher, with the 10-year in Germany up around 12 basis points currently at the moment. So, but the price action is being manifested into a U.S. higher dollar here. Stock prices are also off their highest levels, with the Nasdaq down. The Dow Industrial Average is still higher, but the S&P is near unchanged. So let's take a look at the euro versus U.S. dollar from a technical perspective. And we saw in trading yesterday in the Asian session was a price move above the high prices through here. These high prices are ahead of the extreme that occurred back on November 15th. But this move above this level right here was disappointment, and the price started to rotate back to the downside. Now the downside, what wasn't disappointing was that the price moved below the 200-day moving average and then bounced back above that level. That was giving the buyers a little bit more of a hope that perhaps the market could move higher. And indeed, trading here today, the price tried to hold above that 200-day moving average. It's a green overlay line here until we started to come into the U.S. session. We started to see more move to the downside here, helped by that rising yields, as mentioned before. So we are back below the 200-day moving average. This is a disappointment once again. We moved above the 200-day moving average here. We moved above it here. Those are more short-lived. This move above the 200-day moving average, and this time was a little bit longer in breadth and time, I guess, but we still could not get to the high price that we saw back here. So a bit of a disappointment, and we're seeing this buyers turn to sellers. Now on the downside, we do have some added support here against the 100 and 200-hour moving averages. That's blue and green lines in this chart. Also, there's a swing area through here, where there's a number of different swing highs and so on and so forth through here, and maybe some swing lows here as well, where the price found some support. And so that's a swing area, and the 200 and 100 need to be broken in order to increase the bearish bias to the downside for this currency pair. If it does, then traders will be looking for the 38.2% retracement in this lower swing area on the downside here. So sellers are trying to take control back below the 200-day moving average. That level is close risk for. So traders looking to define risk and looking for more downside momentum. So watch that level. That 200-day moving average currently comes in at 1.038876. Let's move on to the dollar versus yen next. Then we take a look at the hourly chart here, and the in trading the last 3 days have seen fairly decent moves to the downside here in the dollar versus yen. We moved below this swing area through here, where a number of different swing lows came into play, and that increased the bearish bias in trading yesterday. But we moved up, and we tried to stay below it here in the Asian session right through here. But in the last move to the upside here in the U.S. dollar, has seen the price move back above that swing area. Also, a little bit of disappointment that the low price here didn't reach the low price going back to November 15th. Has the sellers on the defensive after the 3 days to the downside. We are seeing a rotation back to the upside. Like the euro versus U.S. dollar, the 200 and 100-hour moving averages are topside targets targets this area right through here where we seem to be stalling out initially, at least in the last few hours, near the 139.61 level. Corresponds with swing lows through here on the November 18th, and then in trading on Tuesdays or Wednesday's trade, the market came down to that level, tried to bounce a little bit higher, and then fell below that level, using that level as resistance right here before rotating to the downside. So there is some history in this level right here, 139.61, that if we get above, then we'd look toward the 200 and 100 hour moving average. If we stay below, like we're trying to do now, getting back below this swing area is what sellers want to see, but they don't want to see the price move above that 61 level. That's my key barometer for bullish and bearish in trading here today. Let's take a look at the sterling versus US dollar next. And if we take a look at the hourly chart to start off with, we see that the pair moved up, got closer to that 200-day moving average. That's the overlay green line right here. The high price got up to 121.52 in trading yesterday, just about 30 pips away from that 200-day moving average, but could not sustain the momentum. The price started to rotate to the downside. Lots of ups and downs and choppy type of trading here today, but in the last hour, seeing a little bit more move to the downside here. Now, this 120.499 level, that level is going to be a level of importance here in the short term and from a longer term perspective, because if you look at the daily chart and we look at the high price of 2022, that goes back to January here, to the low price that we saw in the month of September, the 50% retracement comes in at that 1.2050 level. I thought it was at 499. Maybe I'm just a little bit off here on our ranges here. There it is. This low right here, 1.20499. So off the hourly chart, I had earmarked that level here, 1.20499, and on the daily chart, we have that that level corresponds with the 50% retracement of the move down from the 2022 high. So getting below that level is would give the sellers more confidence to the downside, and or give traders some cause for pause for the upside, I guess, and increase the bearish bias on the downside. So be aware of that level for the sterling versus US dollar. Finally, let's take a look at the dollar versus Swiss, because the last move to the upside here in that currency pair has traders looking toward the 100 and 200 hour moving averages. Those are the converged blue and green lines here, are near converged levels. Those levels come in at 0.9489-ish type area, and that's where the price is currently trading right now. So we are at a key barometer here for the dollar versus Swiss. Move above it is more bullish, stay below is more bearish. So there you have a look at some of the major currency pairs as we start the Friday trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.